This government will tax the fruit, but not the seeds.
We will not tax the seed, we will tax the fruit. Quotable quotes there for you. This past week was a very busy one in Taxation Kingdom in Nigeria. It all began on Monday, 7th August with the 153rd meeting of the Joint Tax Board, which was held in Abuja. Theme was harmonization and codification of taxes at national and subnational level, key to achieving a tax-friendly environment in Nigeria. Closely following that, on the following day, the Presidential Committee on Fiscal Policy and Tax Reforms was formally inaugurated by President Bola Ahmed Tinubu at Aso Rock Villa, Abuja. These two events will form the major part of our offering today on tax matters. I'm Chiamaka Ohawuchi and I'll be your pilot on this journey into the world of taxation. We'll begin with some tax education. Today, we are looking at the monthly tax obligations of corporate entities. For every business entity, be it limited liability company, one-man business, small enterprise, partnership, sole proprietorship, there are monthly tax obligations to the Federal Inland Revenue Service and the State Internal Revenue Services. For limited liability companies, they are required to remit monthly payee deductions from the salaries of the employees to the State Internal Revenue Services where the staff is domiciled, and this is to be done on the 10th day of every month. So, for the month of August 2023, this was due on Thursday, the 10th of August. Next is value-added tax. Filing and payment of VAT by limited liability companies are due on the 21st day of every month. For VAT source deduction agents like MTN, Airtel and money deposit banks, as well as oil companies that are required to file and remit the withheld VAT from their suppliers on the 14th day of every month, as well as file their own VAT returns and remit these sums on the 21st day of every month. Withheld VAT is a VAT component of the payment due to suppliers and vendors to these major players, and the FRS decided early in the year 2023 that these big players should act on behalf of government by withholding the VAT component and remitting to government coffers, stating clearly the particulars of the suppliers and vendors to ensure that they are properly accredited. In summary, withheld VAT returns and remittances are due on the 14th day of the month, while filing and remittance of VAT due from companies' own transactions are due on the 21st day of the month. We must re-emphasize that the VAT returns filed and the payment made in a month are for the transactions carried out in the preceding month. In other words, for the month of August 2023, the VAT returns and remittances are for the transactions carried out in July 2023. We are still looking at monthly tax obligations of corporate entities. Our next focus is withholding tax. Withholding tax is due on the 21st day of every succeeding month. Withholding deductions are deductions made from payments due to contractors, suppliers, and vendors as advance payment of companies' income tax. Last and most importantly, companies' income tax. You may ask, how is companies' income tax a monthly tax obligation? Companies' income tax is paid 6 months after the company's accounting year end. In this instance, for a company whose accounting year end is February 2023, in other words, the year of assessment is from March 2022 to February 2023, it is required to file and pay company's income tax in the month of August 2023, this month. Such a company is expected to pay company's income tax, accompanied by associated taxes such as education tax, police trust fund levy, Naseni levy, and NIDA levy. Only companies with turnover of 100 million naira and above are required to pay Naseni and NIDA levies at the stipulated rates. For the one-man businesses, the small enterprises, partnerships, and sole proprietorships, they are required to remit the monthly pay deductions from their staff or employees to the State Internal Revenue Service where the staff is domiciled, and this is to be done on the 10th day of every month. Again, for the month of August, this was due on Thursday, 10th August 2023. As in the case of limited liability companies, one-man businesses, partnerships, and the like are also liable to monthly filing and payment of VAT on the 21st day of every month following the month of the transaction. Withholding tax is also mandatory on the 21st day of every succeeding month to the State Internal Revenue Service. We must counsel that for accurate filing of tax returns to the tax authorities, records must be kept. Accurate and reliable records. Keep records. Keep records. Keep records. Thank you for staying with us. The Joint Tax Board has been meeting. On Monday, the 7th of August, members of the Joint Tax Board, comprising of the Executive Chairman FRS and the Chairman of the 36 States of Internal Revenue Services and that of the FCT, gathered in Abuja for the 153rd meeting of the Joint Tax Board. Theme was Harmonization and Codification of Taxes at National and Subnational Level, Key to Achieving a Tax-Friendly Environment in Nigeria. To kickstart discussions on the theme, a paper was presented by Mr. Taiwo Oyedele, Chairman, Presidential Committee on Fiscal Policy and Tax Reforms.
We know that Nigeria's tax to GDP ratio is one of the lowest, even for Africa, even with the recent revision to about 10.8%, that's still much lower than it needs to be. And because we do not collect enough revenue to fund social services, infrastructure, and take care of our country, we then have to resort to borrowing, very significant borrowing, so much so that at some point at the federal level, we're spending almost 96% just to service debt. Of course, they agree with me, there's no way a country can develop with that type of revenue and debt service profile. We have made some progress over the years. We shouldn't just sound like everything is not moving, but that progress hasn't been enough. So which means more work needs to be done.
Mr. Oyedele moved on to the crux of the matter.
The key challenges facing the tax system include multiplicity of taxes, but not just that, even multiplicity of revenue collection agencies. Our tax system is fragmented, which means we are doing our own things at our own levels. Even sometimes within the federal government, you do not get enough coordination, let alone getting the coordination you want with the subnational. Despite the low revenue, we also have one of the highest cost of revenue collection in the world. The international benchmark for the cost of collection is 1%. And many countries that are collecting, 10 times what we collect are not even spending up to 1%. So let me narrow down to the topic you've given me, which is how do we harmonize the tax system?
Getting interesting, isn't it? For more details from Mr. Oyedele's presentation, stay tuned to Tax Matters. Chairman of the Board, the Executive Chairman FRS, Mr. Muhammad Nami, delivered the welcome address.
The unique and privileged offices that we occupy as drivers of the nation's tax administration processes presents us with a rare opportunity to take hard but necessary decisions that are expected to yield long-term benefits and also add immense value to our collective prosperity as a nation. In recent years, especially since the dawn of our current democratic dispensation. The importance of taxation has continued to be reiterated and reinforced by all of us. And the critical role that tax revenue plays in funding government and governance cannot be overemphasized. However, as we continue to make progress in our country, in our unique model of taxation, it is appropriate that we continue to explore and adopt measures and the innovative initiatives that will lead to the optimization of tax revenue for all the levels of government in a more efficient, more effective, more inclusive, and more sustainable ways.
At the end of the meeting, a communique was issued. The chairman joint tax board, Mr. Muhammad Nami, and the secretary of the board later spoke at a press briefing. All these and more on the 153rd meeting of the JTB will come to you very soon on Tax Matters. We'll move on to the story of the inauguration of the Presidential Committee on Fiscal Policy and Tax Reforms, where a distinguished group of movers and shakers of the economy was inaugurated as members of the committee at State House in Abuja on Tuesday, the 8th of August 2023. President Bola Ahmed Tinubu was personally in attendance to take charge of the event. Of course, he was ably assisted by the Vice President, Senator Kashim Shettima, who in fact is the chairman of the National Economic Council.
Today marks another milestone in our quest to reform our economy and re-engineer the finances of our country for the optimum performance. Without revenue, government cannot provide adequate social services to the people it is entrusted to serve. Yet, the means by which government raises its revenue is just as important as the end to which such monies are put. The committee has been established to address the broad physical challenges facing our economy. Its mandate shall be divided into three broad areas. These are: 1. Fiscal governance. B. Tax reforms. And third, growth facilitation. Within the scope of this mandate, the committee shall, as its objective, the advancement of viable and cost-effective solutions to issues such as multiplicity of revenue collection agencies, the high cost of revenue administration, the excessive burden of compliance on ordinary taxpayers, the lack of effective coordination between fiscal and other economic policies within and across levels of government, and poor accountability in the utilization of our tax revenue. Our target is to improve Nigeria's revenue profile while making the business environment more conducive and internationally competitive. Our aim is to transform the tax system to support sustainable development, while at the same time achieving a minimum of 18% tax to GDP ratio within the next 3 years.
Special Advisor to the President on Revenue Matters, Mr. Zacchaeus Adedeji, used the occasion to reiterate the essence of the committee.
Nigeria has huge potential for revenue mobilization that should be sufficient to cater for our people without resorting to excessive borrowing, which often crowd out the private sector and limit our ability to finance sustainable development, create jobs and prosperity for Nigeria. From our engagement with various stakeholders so far, the message has been clear, and we recognize the sense of urgency to address the various tax and fiscal impediment facing businesses, both large and small. We are grateful to Mr. President for assenting to the executive orders in July, which provided reliefs to individuals and businesses. The Presidential Committee on Fiscal Policy and Tax Reform, being inaugurated today, will give us the opportunity to further engage with various stakeholders to identify their pain points and critical concerns bordering on tax and fiscal policies, and to collectively develop the solutions necessary to address these challenges in a holistic manner.
Mr. Taiwo Oyedele is the chairman of the committee.
The task before us is substantial, yet pivotal. Our fiscal policies could benefit from better crafting, grounded in data and evidence, ensuring coherence and consistency. We need enhanced alignment with the modern economy and better coordination with monetary and other policies. Many of our existing laws are outdated, hence they require comprehensive updates to achieve harmonization and address multiplicity of taxes, remove the burden on the poor and vulnerable, while addressing the concerns of all investors, big and small. Our tax administration has improved, but remains relatively basic, with instances of unregulated collections by untrained officers, particularly at the local government level, being widespread. Our revenue generation falls below even African standards, yet our collection costs are among the highest. This is due not only to multiple taxes, but also numerous collection agencies and fragmented revenue reporting procedures. Public willingness to pay taxes is strained because of lack of trust in government, both among individuals and businesses, irrespective of size. The burden of tax falls heavily on those who comply, while those who evade often get away with little or no consequences. We need to change that.
In an unprecedented move, the World Bank, the IMF, the United Nations, Budget and the Tax and Justice Governance Platform were included in the committee as partners and observers. The World Bank's country director for Nigeria, Mr. Shubham Chaudhary, spoke at the post-inauguration press conference at the Villa.
We are always here to help in other ways by sharing the experience and knowledge of what's worked in other countries. But in terms of, could not be happier if Nigeria gets to the point where it's generating enough of its own revenues in a way that's actually helping create the space for private investment, for families to flourish, and does not need to come to the World Bank for financing. So one other thing that I thought was really important in how the mandate of this committee was set up is that it's not just about tax and revenues, it's really about inclusive growth, but also about fiscal policy in general, which means about the spending side.
Star of the moment was Miss Oriri Agbaje, a 400-level student of the University of Ibadan, who is the current president, Nigerian University Tax Club. Talk about including youths in governance. We sat down for an exclusive interview with Mr. Taiwo Oyedele, Chairman, Presidential Committee on Fiscal Policy and Tax Reforms. Mr. Oyedele, thank you for joining us on Tax Matters.
Thank you for having me.
So let's begin by congratulating you on your appointment as the Chairman, Presidential Committee on Fiscal Policy and Tax Reforms. This is a huge responsibility, but we believe that with the collective knowledge and expertise of your good self and that of your committee members, the task is achievable.
Thank you very much for congratulating me. Yeah, you're right. It's a lot of work to do, but I'm sure that we have the resources to be able to do a good job.
We believe so, sir. Now, please tell us what this committee is all about. What is your mandate?
Good question. So this committee, set up by Mr. President, has a broad mandate that can be divided into 3 pillars. Pillar 1 is fiscal governance. Pillar 2 is revenue transformation or tax reforms. Number 3 is growth facilitation. Now, I'll try and explain them in turn. Fiscal governance is to do with spending, is to do with revenue optimization, is to do with debt management. So if you think about the fact that in the Fiscal Responsibility Act, for example, we have threshold as to what we should or should not do. For example, your budget deficit is limited to a certain percentage of GDP. You also have indicators as to when you borrow. You don't borrow for recurrent expenditure. For example, you cannot borrow to pay salaries. So those limits sometimes have been breached in the past. And the question we're going to be asking ourselves is, are those limits reasonable? Should they be lower? Should they be higher? Whatever it is we agree, those things have to be respected. It's part of good governance. If you think about it, that sometimes, especially in the last administration, many times they'll say to us, we do not have a debt problem because our debt to GDP ratio is barely 30%, is lower than most countries in the world, and that's what IMF says. That story is not complete because those other countries we're comparing ourselves with don't borrow at very high rate like us, and they don't spend 96% of their revenue servicing debt. The question will be, what is the ideal benchmark for Nigeria? We also are going to be looking under that fiscal governance, coordination, both in terms of vertical coordination, and that is within the federal government itself, monetary, fiscal authorities, government agencies, and also vertical in the sense of how do you coordinate between federal government, state government, and local government. The other part to the fiscal governance is also around the quality of reporting. How do you report the revenue that you generate? And the quality of spending. Are you spending 10 billion for what you should have done with 1 billion? Are you spending 10 years for a project that should be 1 year? We want to get to a point where we can encourage politicians to focus on sustainable development goals and multidimensional poverty reduction in terms of the priority of spending. The second one is tax reforms. So under tax reforms, we have review of the national tax policy. It was done in 2017. Actually, it was done in 2016, approved in 2017. The plan was to review it every 5 years. It's overdue now. We're going to review it and have a new national tax policy. We'd also have reform of the tax laws. We want to rewrite all the major tax laws. We want to be able to harmonize them, simplify them. We even have an objective of, God willing, being able to then put the tax laws into the major languages. The last one is growth facilitation. Now, this one is saying, why are we focusing on taxes instead of creating prosperity? That's why Mr. President said we're not taxing poverty, we'll create prosperity and share in it. We're not taxing investment, we'll wait and tax the returns on the investment. We're not taxing production, we'll tax the consumption. We're not taxing seed, we will tax the fruit. So this concept will drive the work that we'll do, such that we're going to be looking at every sector of the economy: fintech, construction, entertainment and creative, education, healthcare, services, and say, what are the impediments in terms of how they're doing business today? What can government do to remove the impediments and also facilitate their growth? So that way, when people are prosperous, they have jobs, businesses are doing well, they make profit. You just collect taxes naturally, because when people have money, they'll spend, they'll pay VAT. Those are the 3 pillars, and they are broken into 5 dimensions: fiscal policy, or you can say tax policy. There are tax reforms, there are revenue administration. It's also to do with competitiveness, and then the last one is fiscal management. Now, we have various deliverables. Part of it is we are hoping to be able to come up with a list of approved levies and taxes that is no more than single digit. Instead of what we have now that is more than 60, we want to hopefully get to not more than 9. So broadly, these are the mandates of the committee.
The full interview with Mr. Oyedele will come to you in a subsequent episode because we got to go. Thank you for watching. Remember, it is the taxes we pay that ensure the delivery of infrastructure and, of course, well-being of citizens of any country. Nigeria is no exception, and you, me, are all important in that regard. Keep your nose dry. Don't do what I won't do. See you next week.